If you're new to investing, one of the most common questions is, what are the best index funds for beginners in 2026? Let's make this simple and clear. Index funds are investments that track the overall stock market instead of trying to pick individual winning companies. Because of this, they offer instant diversification, lower risk compared to single stocks, very low management costs. That's why many experts consider index funds the best starting point for beginners. Now, in 2026, beginners should look for 3 important features when choosing an index fund. First, low cost. Lower fees mean more of your money stays invested and grows over time. Second, broad market coverage. Funds that track the overall market are usually safer than narrow or risky sectors. Third, long-term consistency. The goal is not quick profit, but steady wealth building over many years. A simple beginner strategy could be: start with one broad market index fund, invest small amounts regularly, and stay invested for the long term, without reacting to short-term market news. This slow and steady approach has helped millions of investors build real wealth over time. So if you're just starting in 2026, remember this simple rule: keep it low cost, diversified, and long term. That's the true power of index fund investing. If this video helped you understand beginner investing more clearly, subscribe to the channel for simple, practical finance videos every week, and tell me in the comments, have you started investing in index funds yet?